The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. A mostly higher day in the grain and oilseed trade on Tuesday, mostly higher in livestock as well. Generally a risk-on type of environment across the board here in commodities, the stock market, etc. We're going to dive in and talk about all of it with Matt Bennett from agmarket.net. He's our guest analyst here on today's Market Talk. Matt, always great to catch up with you, my friend, and hope things are going well there in Central Illinois.
Going pretty good, really. You know, a couple weeks ago, I just said, I don't know what we're going to have for a crop. It was hanging on. I mean, it looked pretty good other than the middle of the afternoon, of course, like everyone else. Corn was rolling a little bit. Beans were looking kind of finicky. Didn't look so hot. Leaves turned over in places, and just come in there on that Thursday, and we had the front come through and just blasted us. It took a couple of 3 grain bins down on the farm, and we got rain, but we paid a bit of a price for it. To be totally honest with you, it wasn't a horrible situation in that of course we've got everything insured, and nobody got hurt. So I would say there's worse things for sure. But we had a good rain there, and then in 4 events we had anywhere from 4 to 5 inches on pretty much everywhere we farm. And so, we didn't have a whole lot of water standing, got the benefit of most of that rain. So we're sitting good now. I think some of the light ground was hurt. Some of the darker ground looks pretty darn good, quite frankly. I don't know if it's got the potential of a year ago. I mean, that remains to be seen. But I do think we avoided a crisis.
Well, and I was going to say, I'm glad you brought it up too. I know we shared your Twitter photos of that grain bin damage and whatnot. And like you said, glad no one was hurt. I suppose if you wanted an excuse to get some new grain bins on the farm, you got it though, thanks to that derecho event. But glad to hear the crop is doing a little bit better with rain. And I think that's one of the big things in this market trade right now. We've seen things turn a little bit cooler, a little bit wetter for many folks. Not everybody though. There's still plenty of areas of concern out there across the Corn Belt, but you have weather, you have a WASDE report in front of us on Wednesday, which could bring some surprises, and then you have the Black Sea grain deal. Feels like all 3 of those things combined right now is kind of what is on the mind of traders here this week, Matt.
Yeah, for sure. And then we heard about 10 to 15 cargoes that China purchased off the PNW of soybeans, and so that's a really good thing as well. But there's no doubt, you've got the report out tomorrow. Everybody's trying to outguess it. What's going to happen here. I think, the USDA can do a lot of different things tomorrow, but the things people are going to be looking for is not necessarily yield. I mean, if they sort of adjustment, if they went, they're not going to go super low. We kind of know that. So I think the yield, it's going to be taken with a grain of salt. What everyone wants to pay attention to is, what are they going to do with demand? And so I think that your assumptions for us to get really competitive, for instance, on the world export market, must be that prices are going to have to move lower, which I know everybody doesn't want to hear, but guys, we are not competitive. There's producers in Brazil getting $3, $3.50 a bushel for some corn in places. Obviously you've got to get it shipped out somewhere. And if you're a remote destination, it's hard, to come up with a good price. And so in their situation, they're competitively priced compared to us. And so why would someone buy U.S. corn? So, I want to watch very closely to see what they do with demand. It's been nice to see ethanol's been solid here lately. Cattle on feed, of course, is way lower than what we've had in recent years. And so we know that feed and residuals not going to be anything spectacular. So we just have to understand there's several different things going on here. And I think the balance sheet it's going to look. It's not going to look like it's looked the last couple of years. You should have something north of 2 billion pretty handily, in my opinion.
Well, to your point, I want to ask you this before I forget about it. You mentioned China maybe buying some cargoes of beans there off the PNW, and we talk about demand being rough for U.S. commodities, which it certainly is. So is China maybe stepping into buying some beans ahead of the USDA report, thinking we could maybe get a surprise there? I mean, what's the thought there with China stepping in to buy beans if they can get them cheaper from Brazil right now?
Well, those were for fall delivery, which is a place that we're a little more competitive. And I'll tell you what, we needed it because our fall book is just pathetic, both corn and beans. It's been running well behind of where it should be. And so, you got to know it's not a cash purchase by any means. It's something farther on out. So, I agree. There's other places probably to be able to source some of those beans. I'm assuming that if the Chinese have a reason to believe that they could be more expensive on further out, maybe they would buy them. But Jesse, I don't know. I mean, I can't get super friendly beans. I understand, the acreage is 83.5 is what the USDA gave us. I totally get that our balance sheets are tight. It's tough to come up with something, even close to 200 for me on new crop balance sheet. I know there was a few folks that guessed over 200, but whenever you're talking 83.5, I mean, you've got to assume some serious issues from Mother Nature, in my opinion, to be able to get that carry out above 200. So, I mean, I'm not saying that. I'm saying a really good crop to get north of 200. I mean, really low, you're still going to be, in my opinion, you're just going to be in a situation on beans that's pretty tight, no matter how you cut it domestically. But this is a world market, and so one thing I encourage a producer to look at whenever the numbers come out tomorrow, look at the world numbers for both this marketing year and next marketing year, because most projections that we're going to easily go up over 10%. And so if you see world numbers for soybeans, which I would say are adequate at the very least, continue to grow, it's really hard for you to expect world buyers to chase this market higher in a situation whenever we're seeing world supply continue to get bigger.
Well, and on that world supply as well, on the case of corn, I think a lot of folks are looking for that Brazilian corn production to go up tomorrow as well, maybe somewhere around 132.8 million metric tons, close to that 133 mark. And so that's another case as well that I think we have to watch on that world balance sheet, Matt.
Yeah. I mean, as far as the world balance sheet goes on corn, we're in good shape as well. The last few years we'd seen demand outpace our increases in supply. And so that was a good situation to have. That's not the situation you're in this year. Mm-hmm. You know me. I mean, I'm a farmer. I grew up in a grain elevator. I don't want to be bearish, but it's kind of hard to be very bullish in the situation that we're in. Given the fact that not only in the U.S. you're going to see carry go from, in my opinion, something south of 1.4 on old crop to potentially you could see something a billion larger than that at some point. I don't think that happens tomorrow. I'm looking for 2.2, 2.3, somewhere in there. But I mean, you're looking at a pretty sizable increase, in carry out stocks because you've got 94.1 planted is what the USDA has given us. With that being the case, we've shored up ourselves from an absolute disaster, as I already talked about. We're not going to look at a 2012 type yield. Yes, some of us are, unfortunately, but I think the systems that have gone through over the past 10 to 12 days have completely changed the rhetoric. You see Illinois continuing to get shored up on your crop condition rate. I'm not a huge crop condition rating guy, but essentially it gives you an idea where we're heading. And so this time of year, you typically see improvements in ratings start to be hard to come by. I mean, because, once you get out past pollination very far, it's pretty hard to make a crop look better, and so it'll be very interesting to see where we land. Are we going to be at, are we going to be at, I don't know, 60% good to excellent? What's it going to be? In my opinion, I think when it's all said and done, this crop has gotten to the point where you could make a case that it could be better than last year on a national basis. I just don't think that you're talking substantially better, because I do think the hot, dry period certainly hurt some prospects in areas. You talk to people in Wisconsin, and I know that's not your major corn producing state, and folks are saying their pastures are dying. I mean, my pastures were dying, Jesse. I mean, everyone in Central Illinois, and I know other places as well, but I'm just speaking in my area, the nervousness about hay and about being able to get a hold of feed, was at a very high level. And so, there's actually some hay that exchanged hands at very, very high levels as far as how much people were paying for it. And it was for good reason. You turn around, you get 5 inches of rain, then all of a sudden things have greened up. I'm not going to say we've got grass that's knee high by any means, but we're at least on a trajectory where we feel a little bit better about not only having some grass out here, but being able to maybe get some hay later on in the summer. So, everything's changed. And when that's the case, typically your corn crop has been able to improve as well. And so again, I'm in the situation where anything north of 170 is really hard for me to come up with a carryout under 2 billion. And I mean, 170 is not a great crop. And so we have to understand we're playing a different game than what we've played the last few years. And it's going to be a little more challenging, especially given the fact that most producers have got quite a bit of money, if not the most that they've ever put into a corn crop, especially if they paid for inputs last fall, than what they've ever done.
Jesse Allen with you here on Market Talk today. Matt Bennett from agmarket.net joining us for market analysis. Matt, you said something earlier I want to come back to real quick, and that's how a lot of folks are trying to outguess the USDA report. We know we can't. Typically, I know USDA doesn't make huge yield adjustments, especially in July, but then we've seen USDA throw surprises at us. Case in point, June 30th. So when you think about heading into the report and your marketing and just trying not to get it caught up in the emotion, I love what you said. Maybe expand upon that a little bit more, just how we can't outguess reports like these, Matt.
No, we can't. And so here's the thing. Corn right now is hard for me to get super excited about doing much, especially, if you're an 85% person, you're protected under 502 at APH. Now, there's a lot of conversations that go into that. What if you're what if your yield's quite a bit more? Then obviously you've got some exposure to the downside at this point because of the way those revenue products work. But beans, we've had one heck of a bean rally in here. And a lot of producers are saying, well, I'm starting to feel okay about my beans now. Well, it was too early for a weather market for beans, in my personal opinion. You can almost kill a bean crop. I mean, yes, we want to get growth. Don't get me wrong. But you can almost kill a bean crop. And many times if you get a well-timed rain event or two, all of a sudden you got 60, 70, 80 bushel beans in parts of the country. And when that's the case, you can do a little bit better than, if it's obviously 30, 40 bushel beans. So, I think there's some opportunities out here. And so, I cannot outguess the USDA. Whatever it is that's printed tomorrow will be traded. Algorithms will pick up on numbers and whatnot. But if I'm a producer sitting here looking at, I don't know, where do we close no beans, 1360? 1360. I mean, how many producers have sold very many beans in their career previous to harvest at 1360? And I would say, I know we all have some. I'm just saying as a percentage, it's pretty low. And so, if you were very concerned here a couple, 3 weeks ago, about, for instance, beans going below $10 potentially, because some people were talking about that might happen, Here we are, $3 plus above that. You can sell fall delivery right off the combine. And so I think a producer needs to pay close attention, because you have no idea what the USDA is going to say tomorrow. If it's a bearish report for any set of reasons, I don't know what it might be. I mean, I've got my inclinations, but wouldn't it feel nice to have some beans locked in at a level you can make really good money at? So, I think corn and beans are two different things right now, but by all means, risk management is something that we need to take a close look at, especially heading into a report in which you have no control over.
Exactly. Great points there about that. Risk management key. Matt, wheat market real quick. I know a couple things there. Black Sea grain deal. It seems like it's dead in the water. That's giving a little support, it feels like. And then two, I know winter wheat harvest is slow and spring wheat starting to see some concerns, some pretty poor looking crop in parts of the northern plains right now. It feels like those two things combined are giving a little bit of support to wheat right now.
Yeah, certainly. You're getting a little bit of support there. Of course, anytime you talk about the Black Sea deal going off, I mean, it's concerning to folks. What's going to be the availability from the world's largest exporter, if you will? I mean, obviously, Russia has got a ton of wheat that they
Yep.
grow, put out on the world market. I think that they would have a fire sale if they could at times during some of this. But at the same time, you look at what's going on here in the U.S. and there's actually some really good soft red wheat that we keep hearing about, which is I'm really happy for those folks. But you get into the West, and obviously the overall environment has improved lately. But you didn't really have conducive weather, in my opinion, to grow a good wheat crop, whether it was a spring wheat crop or whether it was a hard red. I mean, either way, you're talking about a challenging situation. So some of the yields don't sound great, and some of the harvest potential isn't great, especially when you're getting rain at a time you don't really want to get the rain. So, it's the wheat market's got a little stabilization in here. It's typically not going to be a time of year where you rally substantially because you got a fair amount of harvest, but at the same time, we're seeing some support in here, which is nice to see. And again, it might be a good risk management opportunity. I don't think a person can expect a big rally here out of wheat, but that's just my personal opinion.
Over in the protein sector, cattle and hogs, both markets finding some good fundamental support, it feels like. I mean, front month hogs, we're talking $100 hogs on the board. The cattle market, meantime, continuing to, churn up here at high levels. What's your thoughts in the proteins, cattle and hogs, Matt?
I don't trade hogs. Yeah, I'm not a glutton for punishment like that. I would have never thought we'd get back to $100. I mean, hogs looked as pathetic as a contract
Yeah,
could be for quite
exactly.
some time, and then all of a sudden, you just take off and go. And so, it's been really interesting to see. I mean, in my opinion, they're kind of piggybacking off of the strength in this cattle market. A lot of times you'll see, I guess some sympathy buying, if you will, come over. But whenever I look at cattle, I'll tell you what, we were trading 190 for a while. I don't think we closed there, 189.75, on April out there. And I've told you before, and I still believe you'll see $200 fats on the board. It's not that I'm going out there. I will tell you, I'm not going to trade cattle. It's not that. I'm just saying that to me, you're hearing about a lot of folks now talking about how their pastures have really healed up out west. I know, like Kenzie Johnson, that's on with Joe Vakovic. I talk to her sometime, and she says, you know what, we've had all kinds of rain this year, so now folks are talking about retaining some heifers. Jesse, you start retaining heifers. Look at what cattle on feed are going to be then. And I think that's when you could see some sort of a blow off top type action. I think you see the fat market really interesting. I've heard of $200 fats out there in the cash market. I think they're remote situations, but they are occurring. And so it's an exciting time to be in this cattle deal. Not so much to buy feeders, though, because you can't find cheap feeders anywhere. And so, of course, the feeders are got to be hoping that this corn crop is big and that they're not paying $7 for corn again. That's one thing we didn't touch on, because basis has gotten hot again all of a sudden, in some parts of the country. And I think, some of the origination isn't quite what they thought it was. So, I don't want to mix and mesh these a little bit, but as far as the feeders go, they've got a very challenging situation ahead of them.
And two feeders as well. I know the Superior Rockies auction going on here this week. That could give us an indication of what some of that cash activity is on the feeder side. But I'm with you. I mean, feeder's not cheap right now. And then to your point about fats too, I think something else to think about. We're gotten past some of the major summer grilling demands. So you look at the retail side and in the meat case, that seems like that's going to maybe take a little bit of a back burner here in this trade. We're going to focus on cash and fundamentals for a short time, Matt.
Yeah, I think that's probably going to be the case. And the fundamentals, I mean, how do you get more bullish as far as fundamentals are concerned?
Yeah.
And then the cash market, you talk to folks. We actually hauled 5 fats out. It was our last 5. And we do have cattle as well. In my spare time, that's what I do. But, as far as the fats are concerned, I don't know what they brought yet. Nobody's texted me to tell me. But I know that there was a lot of mid 180s, for the top of the market in places last week, low to mid 180s. So I hope I get in on some of that. But bottom line is these fats, depending on where you're at, I'll tell you, people are really hunting them. So demand is awfully strong. It's alive and well.
Matt, great thoughts as always. Before we let you go, anything final you want to share with folks today?
Yeah, I mean, bottom line, as always, is pay attention to what's going on with your profit margins. It could get pretty bumpy if we end up having a good end to the summer. We've got some really good opportunities in front of us right now, especially in soybeans. So, always base your decisions on profitability. Don't listen to all those clowns out here trying to forecast prices. Base it on your farm and what you can do on your farm.
And if folks have questions, I know you and the guys there at agmarket.net can help them answer those questions. They can just reach out on the website or with a phone call. A lot of different ways to get in touch, isn't there, Matt?
Yep, agmarket.net, best place to get us.
Matt Bennett, appreciate the time as always. Have a good one. We'll talk to you again real soon. Thanks so much.
Absolutely, bud. Thanks.
That's going to do it for today's show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.